Welcome to Matters Financial and Geopolitical from the Frontier. Thank you kindly for stopping by. I do appreciate it. I trust you had a wonderful weekend. It's been rather cool here in Nairobi. It's the cool season. It's very pleasant, I find. Well, unless it rains bucket loads and the whole place gets backed up with water. My macro thoughts were some thoughts on the Kenya shilling. The Central Bank of Kenya in a delicate position over the weak shilling. I said the Kenya shilling has retreated 5.5% versus the dollar this year and briefly printed levels of over 97 last week before staging a recovery to close just below 96 at the end of the week. Practically everyone I meet is concerned, and a push above 100 would drive a stake through the bullish Kenya narrative and will prove very difficult to roll back. It's worth contextualizing the shilling against the backdrop of African currency weakness. Only one African currency is appreciated against the dollar this year. Incredibly, that currency is the Malawian kwacha. Therefore, it's worth putting this 5.5% retreat of the shilling in its proper context, and also worth noting that when you consider the carry being the difference in interest rates that you'd receive in dollars versus the shilling, it pans out at a difference of about 8% in favour of the shilling over a 12-month period. And if you factor that in, the retreat is only about 2.5% year to date. This is not to diminish the fall, but to temper some of the more extreme pronouncements. Nevertheless, a move to triple digits will be a hammer blow. At this period of the year, full-year dividends are paid out at the Nairobi Securities Exchange. A very big slice of the total dividend payout at the NSE is in fact upstreamed to parent companies beyond our borders. Think Vodafone, Safaricom, Diageo, EABL, Standard Chartered PLC, Barclays Bank PLC, and many others. So there is a cyclicality around the shilling, and this period is one of extreme demand for hard currency. This spike in demand is correlated to dividend payments, will ease sharply going forward and give some respite to the shilling. Hard currency tourism receipts have created big, and there is no silver bullet for 2015 that I can see. Our source markets book holidays up to 12 months ahead of the actual holiday, and therefore the recovery remains over the horizon and dependent upon a significant and sustained improvement in the security profile. Tourism will remain a drag on the shilling for the foreseeable future. I know many are parlaying the weak shilling into a potential export boost, but my question remains, where is the elasticity of export supply? There is a myth out there that somehow a weaker shilling will equate to a deluge of Kenyan exports hitting the world markets. Where this supposed deluge of exports is going to originate from remains a mystery to me. The current skew, where imports are a multiple of our exports, means we lose big when the shilling weakens. The single biggest expense item for Kenya Inc. is fuel. WTI, that's West Texas Intermediate crude oil, topped $100 a barrel last year, then slumped to $44, was last trading at about $61.50. Any further recovery in the price is going to add further sell-side pressure to the shilling. It's a double-edged sword because a recovery in the price will bring our oil story back into play, but it will also mean we have to find more shillings for our monthly imports. If you are trading the shilling, then you need to be watching the price of oil because there is a very high inverse correlation between the shilling and oil. The central bank is in a very delicate place, and it's not helpful that the apex bank is still without a substantive head. My biggest concern remains that a move above 100 will be a catalyst for massive hedging, and this will prove a tsunami for the shilling. The dollar has lost considerable ground on the international exchanges over the last few weeks, and this trend change has not yet been reflected in African currencies. For now, this might push the shilling to 94 before 100, but we are not out of the woods. Home thoughts. I took this photograph at 6:50 a.m. at the Muthaiga Thika Highway intersection. of the sunrise, and I tweeted "Rise and Shine." And then I like this photograph of a Soyuz TMA-14M capsule seen above the clouds as it descends beneath a parachute before landing southeast of Jeskisgan. Mohamed Morsi has been sentenced to death. My conclusions are that Egypt's financiers are probably pulling the strings in this Muslim Brotherhood Mohamed Morsi regard. Islamic State says it fully controls the Iraq city of Ramadi. CNN informs us that it's a large city just 110 kilometers west of Baghdad. And I'll put up a photograph that leader Telegram tweeted, "Ramadi falls to IS group." So this is like a knife being put to the Baghdad government's throat. And it is within the Sunni triangle, but nevertheless its proximity to Baghdad is what I'm sure concerns many. For Gulf rulers for whom US support tantamount to a vital lifeline, there wasn't really any choice in the matter. And I tend to agree with Mr. Badr Kuma about the Camp David visit, where the Emir of Qatar stepped forward and stepped up. Moscow and Beijing may be on the verge of signing a secret military protocols, as in the Molotov-Ribbentrop Pact. And a little bit extreme, obviously, caught my attention. But the point is, the pivot to Asia was blunted, in my view, by the pivot to Ukraine, the twin pivot. And the net result was to launch Vladimir into Xi's embrace, in my view. The architect, of course, of that pivot to Ukraine met with President Poroshenko over the weekend. APU, which must be the presidential press unit in Ukraine, tweeted, "President Poroshenko had a meeting with US Assistant Secretary of State Nuland." Edward Luce has written an interesting piece in the FT, "The Pivot to America," he's called it, talking about Barack Obama, saying that he announced a reset of relations with Russia only to see it trashed last year in Crimea, tried to broker yet another doomed settlement between the Israelis and the Palestinians, has embarked on a modest pivot to Asia. Time will tell whether it will nudge China in a more cooperative direction, broken the taboo on talking to America's enemies, notably Iran and Cuba, and I think it's a pretty seismic move he made in that regard. Meanwhile, Obama has expanded the radius of drone attacks. I don't agree with this at all, and promised to defeat Al-Qaeda's success in the Middle East. He also continues to push America's partners to set limits on global warming and the spread of nuclear weapons, saying the Obama record is a potpourri of pragmatism and idealism. Some of it has worked. Some of it has backfired, withdrawing from Iraq in 2011. Some of it deserves to succeed. Is there a doctrine in there somewhere? Talking about two new books. The first, The Obama Doctrine by Colin Dweck, George Mason University, saying that Obama's real priority has been his domestic agenda. At best, foreign policy has been a distraction, in Dweck's view. Ian Bremmer says you should not be confused with a doctrine. Obama, he writes, has defined his foreign policy goals in negative terms. He won't put troops on the ground. We won't stay past December. We won't commit resources beyond our means. We won't move forward without partners, says Bremer. And I wrote, just because President Obama chose to forego the Son and Lumiere shows and preferred to sheathe his iron fist in a velvet glove, well, some of the time, it really is extremely superficial to paint him as some kind of Jimmy Carter figure. President Obama has expanded the dimensions of American power. He has been an arch and skillful proponent of currency warfare. Russia is one example, Iran another. Oil warfare. A neat trap was sprung for Vladimir and other 21st century types of warfare. He has progressed the US national interest in a way shock and awe merchants simply do not understand, what I think. Put up a photograph of him studying a map presented to him by the National Geographic Society at the White House in 2009. This photograph caught my attention. A still image from surveillance video entered as evidence during the trial of Dzhokhar Tsarnaev. Have a look at that photograph, it's pretty arresting. That night, the two actual bombers, Tamerlane Tsarnaev and his younger brother Dzhokhar, known as Jahar, behaved as if nothing was amiss. 20 minutes after the bombs went off, security cameras caught Jahar buying a pint of milk. Jahar tweeted, "Ain't no love in the heart of the city. Stay safe, people." Fed says that banned researcher commandeered a plane. The security researcher kicked off United Airlines flight last month after tweeting about security vulnerabilities in its system had previously taken control of an airplane and caused it to briefly fly sideways, according to an application for a search warrant filed by an FBI agent. Chris Roberts, a security researcher with the One World Labs, told the FBI agent during an interview in February that he had hacked the in-flight entertainment system, or IFE, on an aeroplane and overrode code on the plane's thrust management computer while aboard the flight. He was able to issue a climb command and make the plane briefly change course, the document states. And it's an important point, and it's hardly been ventilated in the media, this very point. And there was several, I think, the regulatory authority for aeroplanes, they had also spoken about this risk. DPRK News Service, who I follow on Twitter, tweeted on May the 16th, Kim Jong-un visits KPA Unit 810 Xinjiang Fish Farm. Regales soldiers with epic story of a miraculous fish he once ate. There's nothing else you can say after that. When I came in this morning, the euro was at 114.22. It's now trading at 113.70. Dollar index at that time was 93.40. It must be higher. Japanese yen were now at 119.73. Swissy early in the morning was 0.9177, but I think the central bank has made a few comments. The pound is at 156.61. Aussie below 0.80. India rupee 63.575. South Korean won, when I checked last, 1086.09. The rial below 3 at 299.77. Egyptian pound 763.85, and the rand 1182.66. Dollar index, I'll put up a 3-month chart. Dollar bulls felt the pressure as the dollar has retraced a great deal, and we've been hit with a slew of weak US data. 11-month rally saw it rise 27.5% between May 2014 and March 2015, while its recent pullback has been about 7.4%. The minimum Fibonacci 38.2% retracement lies near 92.20. This is on the dollar index. Resistance now seen near 94. Euro dollar 113.73.74, and clearly big correlation with Bund yields. So keep an eye on that. Gold last trading at 1228.05. Strong rally of late. Crude oil up again sharply this morning at $61.35. Jamie, who's at Reuters, tweeted on May the 15th, oil on track for its 9 weekly rise in a row, the longest winning streak since at least 1983, which is interesting. However, the fundamental story remains very bearish. And there's another article in Bloomberg, hedge funds lose faith in oil rally as OPEC seen boosting supply. If you want to have a look at that, go to Rich Wrap-Ups, the stories there. Saying global crude oil supply was a staggering 3.2 million barrels a day higher in April than a year earlier. That's the point. US has bought an average of less than 1 million barrels a day of Saudi crude oil over the past year. It shows you how things have shifted. They're buying no African oil either. Coming to Africa, normally risk-averse US pension funds are starting to bet big on Africa, we've learned. The Wall Street Journal recently reported that one of the largest pension funds in the US, the $180 billion New York State Common Retirement Fund, plans to invest about $5 billion in the next 5 years in Africa. We are considering investing up to 2 to 3% of assets across all sectors of the portfolio in Africa over the next 5 years. And that's about the fair, if you wanted to be neutral, you're a global fund manager, you want to be neutral Africa, that range is around between 2 and 3%. So they're just going to neutral. The Carlyle co-CEO sees an African private equity explosion. And then, of course, extraordinary events in Bujumbura. President Nkurunziza turned up on Sunday, and it was quite interesting because obviously the few journalists that I follow suddenly were invited to State House and started to talk about the fact that they were headed in that direction. He said, "We take seriously the threat of al-Shabaab." A spokesman for the Islamist group said Nkurunziza's remarks were dumbfounding and said the problem in Burundi were clearly domestic. "We think that this is an attempt by him to appease his people who are standing in the streets protesting against his dictatorship, or to divert the world's attention from him while he possibly prepares his mass revenge." This is Sheikh Ali Mohammed Rage in a statement to Reuters. He's the al-Shabaab spokesman. This was a smart political move, and obviously the excuse of counter-terrorism is what he's going to use for a massive crackdown on his opponents, I think. The counter-terrorism label allows him to sweep it all up, things related and unrelated. Heidi Vogt tweeted this photograph of President Nkurunziza when he said all this yesterday. Harun Mutasa said, President Nkurunziza said he has intelligence that al-Shabaab was going to attack Burundi, but he said everything is now under control. And I tweeted during this time, "You are either with Pierre Nkurunziza or you're with the terrorists," was my takeaway from yesterday's news conference. I'll put up a photograph of boys walking behind patrolling soldiers in Bujumbura that's caught everyone's attention. And Harun Mutasa again tweeted, "Ngozi today, this is President Nkurunziza's hometown in Burundi." I'll put up a photograph of that. The Observer made the following points. "Luckily for Burundi, so great was the mutineers' incompetence that they failed to grasp the need to seize the state radio station, a prerequisite for any successful African coup. They also failed to ascertain the loyalties of the army chief and police. After 48 hours of confusion, sporadic violence, their plot flopped. Now they have surrendered, throwing themselves on the uncertain mercy of President Pierre Nkurunziza, the man they sought to overthrow. What did not happen in Burundi last week has wider import too." UN Refugee Agency tweeted boats carrying refugees from Burundi arrived safely in the DRC. The Economist has a very interesting article about Angola. The music stops. Analysts predict GDP growth of 3% this year, down from 6.8% in 2013, but some observers warn that things could turn out a lot worse. Oil used to account for about half of GDP, nearly all foreign currency earnings, and 3/4 of state revenues. In recent months, the government has stopped paying many of its bills after slashing expenditure by $15 billion, the equivalent of its entire infrastructure budget. Officials are hoping to raise a total of perhaps $25 billion. They are tapping everyone from the World Bank to Goldman Sachs, as an African diplomat. Road projects across the war-ravaged country of 15 million are on hold, endangering efforts to diversify away from oil. Construction firms are shedding workers at an unprecedented rate. Suppliers of machinery say orders are down by up to 2/3. Foreign embassies report a dramatic drop in imports. State-owned companies are being told to cut costs by 30% and investments by half. Angolan banks have frozen their dwindling dollar reserves on the orders of the central bank as the local currency hits record lows. No new credit cards are being issued and foreign currency withdrawals are limited. As a last resort, on May the 7th, the government announced an end to fuel subsidies, which used to consume a whopping 4.5% of GDP, and that's always a dangerous moment, frankly. South African oil share firmed up 0.29% on Friday. It's up 10.07% year to date. Had a great start to the year. Dollar rand 11.8266. Vodacom earnings decline as competition weighs on falling prices, but it's an interesting perspective on a number of African countries. In South Africa, we've faced major cuts in mobile termination rates, a weak economic environment, exchange rate volatility, and increased price competition. In Tanzania and the Democratic Republic of Congo, pricing pressure impacted our performance. Egyptian pound 7.6385. The Egyptian stock market, it's down 6.3% year to date, but has fallen 17.77% since February the 4th. Nigeria all shares up 2.38% year to date. Ghana Stock Exchange is up 2.77% year to date. Earth Pictures tweeted Victoria Falls in Zimbabwe. Rather fantastic photograph. I'd love to go and visit. South Sudanese, according to the Sudan Tribune, South Sudanese rebels have shot down a helicopter gunship. Opposition forces, led by former Vice President Riek Machar, said they'd shot down a helicopter gunship on Sunday which tried to bomb their forces that control the Upper Nile State's capital, Malakal. South Sudan Army also admitted the rebels have captured Malakal, but vowed to retake it within days. Jason Strazuzio, who now works for the ICRC but was previously the East African correspondent for Associated Press, tweeted, "Major macroeconomic rumblings, South Sudan pound free fall versus the dollar, official rate 3-1, street 12-1 and rising. Importing supplies difficult." He also tweeted a photograph of Juba Airport. These photos don't do justice to how packed the tarmac is, South Sudan. And then Grace Cahill, supermarkets in Juba out of water. A company, Aquana, apparently also stopped production. Now fuel, water and bread shortages. Coming here to Kenya, I like this photograph. The whiskey whisperer, Sam Dabe, 69 on Twitter, tweeted on March the 22nd, "When the sun goes down in Nairobi." It's a lovely photograph. "What's next for Kenya's mobile money revolution?" is a headline on CNN. And quoting Bob, "People will often sacrifice on the quality and the quantity of the food they eat, but will not sacrifice on how much they spend on the mobile phone," said Bob Collymore. "It's an essential part of their daily lives. Nowhere is mobile money more effective than in the microeconomy, or what Kenyans call the kidogo economy. It's people buying things one cigarette at a time." Put up a link on Rich Wrap-Ups for Safaricom share price data. Of course, it's had a strong start to the year. A bit of profit taking has come in since they released those very strong results, where full year revenue expanded 12.9% and full year earnings per share up 38.5%. M Holdings, which is part of Bank N Tanzania, received a go-ahead from the Competition Authority of Kenya to acquire a 51% stake in Oriental Bank. So that's interesting, because normally you associate cross-border transactions with Kenya, and here you've got a Tanzanian entity coming into the country. President Kenyatta on Friday signed into law the Alcoholics Drinks Control Amendment Bill 2015, setting the excise tax remission at 90% from the current 50% for beers manufactured using at least 75% locally sourced sorghum, millet or cassava. Sales of Senator Keg and EABL low-cost beer manufactured using sorghum dipped sharply, about 99%, after the introduction of a 50% excise tax in October 2013. This is really welcome news and a big win for the sorghum farmers in the country, and it's a big step forward for EABL Senator Keg, whose sales had collapsed. And the last investor briefing, Charles even said Senator is now of marginal importance. So it's come back. It was, in terms of turnover, very impactful. I'll put up a link for EABL share price. It's traded just 100 shares before I started doing this podcast, up about 5.5%. The Nairobi All shares up 2.971% year to date, but it's at a 3.5-month low. NSE 20 is down 2.58% year to date. I love these photographs from the Sheldrick Wildlife. This is Daphne Sheldrick. May 14th, keeping a watchful eye on Savo's elephants. Our aerial surveillance units in action, and adopted 2 elephants there, and I was checking on where one was, because they're orphans and they put them back in the wild. And this photograph, May 10, view from the skies as our aerial surveillance goes on patrol, wildlife elephants. Once again, I'm grateful to you for stopping by during your busy week. Thank you.